G'day, ladies and gentlemen, and welcome to another episode of Expat Chat, episode 138 today. And as always, I'm joined with my co-host, the managing director and founder of the Atlas Wealth Group, Brett Evans, who is based obviously in the Middle East, looking after Europe, Middle East, and the Africa region. How are you, Brett?
We're all getting ready and excited to be breaking for the Eid slash end of second term school break. So
Yes. Yep.
there'll be an exodus at DXB Airport, and I'm just looking forward to having a week and a half off of recharging, and then it's the sprint into 30 June. We've got the budget, we've got the election. There's a lot coming up in the next couple of months. So topping up the tanks and ready to go for the second sprint. And for
Does
the
seem to
folks
be
on
an
the
exodus.
there
Oh,
always
sorry, mate.
is. No, as I say,
Always.
I was just going to repay the kind words to introduce the folks on the call to Mr. James Ridley to my left, your right, who's the managing director for the Asia Pacific region. G'day, mate.
G'day, and I suppose good afternoon on this lovely afternoon on the Gold Coast in Surfers Paradise. But mate, yeah, seems like a bit of an exodus. Talking to some clients that are, I suppose, exposed to a lot of Middle East relations and work, and they just said, "Oh, it's Eid," and what they mean by that is things stop. Things just
Well,
stop. Anything
when
that's going on gets paused for the next week or so.
when Ramadan been there for the last almost month, the handbrake comes up halfway, and then Eid happens, and then the handbrake's fully up, and don't expect
Yeah,
anything to be done. So
yeah,
I
yeah.
remember seeing the numbers. I haven't seen them recently, but they always give us a forecast of how many people will be at the airports this weekend, and it's in the millions. Like it's like they'll
Oh
say,
yeah.
Dubai Airport will have 1 million passengers today or something like
Oh
that.
yeah,
So
it's a good airport, that one as well. I remember
yeah,
being like last year over there. That airport's on steroids, to be honest, compared to
yeah,
some. Um, so everyone will be flying out, going away, going skiing, or going somewhere warmer, whatever might be the case. So
Evan,
that's
there's lots of
exciting.
options. Some people going north, south, east, and west. So,
Absolutely,
but
mate.
it's the old case of whoever's the last person in Dubai turn the lights up.
Yep, exactly, mate. And today I wanted to pin you down and talk about a really important topic. And it'll be about trusts. So I want to talk
Yeah,
about family trusts or discretionary trusts. But before we get into it, quick disclaimer.
let's keep the compliance officers happy in the world. All the information we're going to share with you good folks today should be treated as informational and educational purposes only. Please do not construe this as personal advice. If you do need to get personal advice, please speak to a specialist like Atlas.
Absolutely, mate. And talking about discretionary trusts in Australia, I think, we might talk a little bit about the tax vehicle, the structure, what it is, how you set one up. I'll kick us off. So in Australia, family trusts have been around for years and years and years, and they are probably accountants' favourite tax vehicle. A family trust is a discretionary trust, so they just get coined with the family trust, and it's often because of how the trust deed, which is the document which essentially governs what you can do with the trust. But that being said, there's a lot of other types of trusts in Australia. There's a hybrid trust, there's a unit trust, there's a fixed
Te-
trust.
Testamentary
Um,
trust.
Testamentary trust, TDT, which is common with estate plans, but they are probably the most attractive tax vehicle, especially when you're in Australia, living and working here, and you're looking at ways to maybe have some tax efficiencies, minimize your tax exposure in certain ways, using family members, using corporate structures, bucket companies, other things to cap your tax rates depending on what you're doing. So they can be a terrific vehicle. Um, you can be an individual trustee, or you can be, I guess, a couple of trustees. You usually have a corporate trustee, though, because it's a lot easier to transfer over the powers when you've got a corporate trustee. And that's usually a company that sits on
Yeah,
top of that discretionary
you just
trust.
swap the directors in and out.
It's exactly right. I think also a common misunderstanding with family trusts or discretionary trusts is they are not part of your estate. They do not form part of your estate. So if you're ever doing a will and you're including your family trust in there, just remember it's actually not a trust estate asset, or it's not an estate asset. So you need to make sure that you have the right handover to either a backup appointer or making sure you're applying new directors to the corporate trustee if you're getting on and you can't make decisions anymore. That's probably as much as I want to do and talk about trust setups. Why do people use them? Well, they'll put assets in them, they invest them, but then at the end of the financial year, you'll do what's called the minutes. The minutes tell the ATO who is going to be receiving different income distributions, capital gains, and normally the purpose is to minimize your tax, not avoid tax. We don't do that. We minimize tax, and we do that through looking at our family spread maybe, seeing who has the lowest marginal tax rate and maybe distributing income to them. And therefore we're reducing the overall tax we would pay compared to if all that income was just put down to yourself as an individual. If you're working full-time, you're going to be maybe paying the highest tax rate on those income and capital gains. So that's why the powers to be able to distribute to different family members, or depending on what the trust deed says, and other corporate entities, is the real attractive part. There are some nuances with directors' loans, Division 7A loans, which we won't get into today. But that's probably a good summary of why people like to use them, because they have the ability to choose who they distribute money to reduce their overall taxes. If
Yeah,
we take it a step, that's right. You go, Brett. Yep.
no, I was just say, I think of it in layman's terms, imagine getting paid a salary, but the ability to split that salary 3 or 4 ways, that's the best way to think about it. There's an income
Yep.
stream coming through. Instead of getting hit with a top marginal tax rate, you can disseminate that salary, or in this case, the trust distribution, in a way that brings it down below those brackets and
Yep.
minimises those scenarios.
That's exactly right. And I mean, often we might get some inquiries from Aussies overseas that may want to use these trusts while they're living overseas and non-residents. And there's not too many scenarios that I've seen where it is attractive to run and use a trust whilst you're living overseas. Um, Often when that happens, you end up actually just running a non-resident trust, because usually you've set it up for some reason, but you're the one that's still attached to it. You might be the director of the corporate trustee, and you're the one still pulling the strings, but you're a non-resident, which usually means that you've set up a non-resident trust. So you're not going to get the tax benefits anyway, because it's now a non-resident. So it's almost pointless. And there can be scenarios which play out where even if it's treated as an Australian tax resident and there's money that's in there, there's a capital gain event, because the trust deed governs who the beneficiaries are and you're a non-resident, the trust might actually have to pay tax on your behalf. There's been some really good tax determinations in the last couple of years around holding property or holding shares, and the beneficiaries were non-residents. But the trust had to pay tax on them, which is a bit silly, because often us as an individual might be actually the most tax-favoured type of vehicle to invest through. So it's interesting that, but I think people like the idea and concept of using a trust and
Oh, it
maybe
sounds
even
cool.
saying it out loud. It
Yeah,
does sound cool, doesn't it? Oh
it
yeah,
is.
I've got a
I've got
couple
a
of trusts
family
set up.
trust. Yeah, and look, and you hit the nail on the head with that factor invoicing guy. I can't remember his name. They won't belly
Yep.
up anyway. But his case is a great case. If me as an expat based in Dubai, I can hold shares 3 ways. I can hold shares in my own name. I can hold it in a joint account with my wife, or I can hold it through a family trust. If I hold the shares as in my own name or as a joint name, guess what? Tax-free, from a capital gains tax point of view. If I
That's right.
hold those shares in an Australian family trust or a discretionary trust, guess what? That trust is deemed as an Australian tax resident. And coming back to your point about trust not forming part of your estate plan, it's like a third person that gets attached to you. It's like a ghost. So it's
Mm.
actually not you holding it, it's someone else, but it's yours at the same time. So why would you put shares into a family trust when you got to pay capital gains tax on it? The only time I've ever seen the strategy of a family trust working for an expat was they were building up a property portfolio. And by holding property in that property portfolio, it meant they could get access to the 50% capital gains discount, which was because they're doing development work and all sorts of complicated stuff.
Mm.
So they actually wanted that 50% capital gains discount. That's the only way that made this whole strategy work, was getting that discount. Otherwise, it was moot. So that's the only time I've ever seen that. But then the problem is trying to get a loan for a property through a trust. The banks don't like it. The more steps that are removed from you, the less comfort they have. They're happy
Yeah.
to lend money to an expat, to you in your name, because they know your salary, your expenses and everything. But as soon as you put a layer between you and them with that family trust, they're like, oh, they sort of lose a bit of control, and things become a lot more difficult. So I think
Hmm.
the other problem you've got with trust as well too is there's I guess a trust factor. Pardon the pun. I didn't even think of that. So, and that is you as a non-resident, or you and your wife or husband can't be the sole trustees of a trust. That if you're overseas and the trust is in Australia, you have to appoint a third party, friend, relative, someone to be a third trustee who's a tax resident of Australia for that trust to remain compliant. Some people aren't happy with that. They don't want to release that control or that ability to manage. So, yeah, to me, trusts work very well as a repatriation tool when you're coming
Yep.
back into the country. But if your length of time overseas is on average 5 to 7 years, which is what most expats are, trusts don't make sense at all.
No, no, no. I think they make sense when you're back in Australia. Australian
100%.
tax residents can be a terrific tool to use as part of repatriation, moving wealth into there that you've accrued whilst you've been abroad. Absolutely. I love that strategy. I use it day in and day out for clients, and it's a really smart tool to use. But again, the caveat there, they're coming back. They're Australian tax residents. So
Yep.
um, in that sense, it makes sense. Before that, not too much. Haven't seen too many good outcomes by trying to run a family trust or discretionary trust, I should say, whilst you're abroad. There's going to be a slip up there, and you're really just removing and handcuffing yourself with probably some of the attractive tax concessions that you can get access to when you're an Australian expat.
I find most folks get ahead of themselves. They want to build something in Australia, but what they don't understand is you need to manage your financial affairs by the demarcation of the jurisdiction and the tax residence unit at the time. So it's all well and
Mm.
good to plan, I'm going to set up a family trust and this. It doesn't actually take a lot of time to set up family trusts and put money into it and all sorts of stuff. That's very easy. But
Mhm.
people often put the cart before the horse and we say from now until when you repatriate, you manage your money like this. But once
Yep.
you're back in Australia, we're good, you manage your money like this. And by doing it that way, you're getting the better tax optimized outcome. People sometimes be a bit lazy. I'll just set it up now and I'll start doing it now and I'll pay a bit of tax. But why would you want to accrue capital gains tax liabilities when you're an expat? So,
Mm.
yeah.
Right.
So try
Right.
and talk a lot of folks out of that one.
Yep, 100% agree. And I mean, I reckon if they're talking to the wrong kind of accountants, the accountants are probably trying to sell you on these entities because it's increasing their billables. So just be mindful of that as well. I know
Exactly. They get tax
I know,
returns for trusts and everything, so they love it.
yeah, know a couple that do it and don't like them. That's been a really good topic there, Brett. I think we would probably wind up there.
Mate, and a bit of housekeeping, we have the budget webinar coming up in
Absolutely.
I can't remember the dates, early April. You'll see a lot of verbiage coming out from us on our emails and on our socials, so keep an eye out for that, register it. It's going to be interesting to see how Labor positions the government in the lead up to the election. You know, no doubt they'll be kissing babies and handing out lollipops and potentially causing more inflationary spiral up, which could lead to less rate cuts or maybe
Yeah,
rate increase. So
that's
it's a
right.
dangerous
That's
game we're
right.
playing right now.
I know they've already announced it's going to be another deficit. So they've been on the front foot. They're saying it's in line with what their expectations were last year. Week beginning the 7th of April. That's when we'll be doing it. So
Yep,
keep an eye out. We'll be putting that out. Those who haven't joined our Facebook group, the Australian Expat Financial Forum, jump on there. A lot of good conversations happening at the moment with expats. Currency is a big one at the moment. There's always some good themes going around on currency. Australian dollar is still quite weak relative to the US dollar, so you're extracting a good amount of value out of that one.
definitely.
But in the meantime, guys, thanks for tuning in for another episode.
Good to see you guys. Thanks, James.
Thanks, Brett. Speak soon.